There is a quiet clause hiding behind the glow on your wrist, not one sentence that says, "We are selling your heartbeat." It is usually softer than that. Share with trusted apps, improve services, work with partners, participate in wellness programs, use de-identified information. The language sounds boring enough to skip, which is useful because boring is where the door opens. Your smartwatch is not just counting steps. It can record heart rate, sleep timing, movement intensity, respiratory clues, location during workouts, and the pattern of when you are active or still. One reading is a stat. Months of readings become a behavioral signature. That signature is valuable to anyone trying to predict risk. The first privacy problem is not always the watch company. Major platform documents often emphasize user control. Apple says health app sharing is controlled by the user, and third-party apps must ask for access. Fitbit's policy says the device can collect steps, distance, calories, heart rate, sleep stages, active minutes, and location. It also says employers or insurance companies may offer Fitbit services to customers or employees. That is the hinge. A user can connect a wellness app. An employer or insurer can offer a discount. A coach can be provided through a program. A third-party app can ask for health access. Once the data moves outside the protected device ecosystem, the next privacy policy may matter more than the watch. This is how a digital risk profile forms without one dramatic villain moment. A step count becomes an activity trend. Sleep disruption becomes a recovery signal. Resting heart rate becomes a fitness proxy. Missed workouts become adherence data. A location-tagged run becomes routine evidence. The score does not have to say diagnosis. It can say likelihood, engagement, risk tier, or eligibility. Regulators already know this pattern. The FTC's GoodRx case said a digital health company shared sensitive health information with advertising companies after promising not to. The FTC's biometric policy statement warned that biometric data can reveal sensitive information and that companies must evaluate third parties who receive it. The connected car case brings it even closer to insurance. The FTC accused GM and OnStar of collecting driver behavior and location data, then sharing it with consumer reporting agencies that insurers could consult when setting rates or making coverage decisions. That case was not about watches. It was about cars, but it proved the business model. Sensor data can look like a helpful feature when you enroll, then become a risk signal in a market you did not picture when you clicked agree. The second privacy problem is the word anonymized. It sounds like a magic eraser. It is not. Wearable patterns can be distinctive. Your commute walk, sleep rhythm, exercise gaps, heart rate recovery, and the days you stop moving at the same time every afternoon can work like a fingerprint. Remove the name, and the pattern may still point back to a person when combined with other data. For insurers, the temptation is obvious. Insurance is priced around prediction. If a company can see that one applicant sleeps poorly, moves less over time, has high stress proxies, or quits activity right before renewal, the data is not just personal. It is financial. Even voluntary programs can become coercive. Join the tracking program and get a discount. Decline, and you may pay more than the person who accepted surveillance with a smile. That shift changes medical privacy. Doctor-patient confidentiality protects a clinical relationship. It does not automatically cover every sensor reading from a consumer device, every wellness app, or every analytics vendor outside the clinic. The new privacy boundary is the app permission screen, the employer benefit portal, the insurer discount program, and the data broker contract you never see. The practical move is not to panic. It is to stop treating your watch like a sealed medical vault. Audit which apps can read health or fitness data. Revoke broad access for apps that do not need it. Check whether any employer, insurer, rewards, coaching, or research program is connected to your wearable account. Look for separate consent forms, data sharing settings, deletion options, broker opt-outs, and state privacy rights. Also read the wellness program trade. Ask what data is collected, who receives it, whether it is used for underwriting or rate decisions, how long it is retained, whether de-identified data is shared, and whether declining can affect pricing. If the answer is vague, assume the value of your pulse is higher than the reward card. The future could be better. Privacy-first wearables can process more data locally, share only narrow summaries, and separate medical-grade records from lifestyle scoring. Laws can require explicit recurring consent for biometric sharing, stronger broker deletion rights, and a bright line between wellness nudges and insurance penalties. Until then, your smartwatch is a useful tool with a financial shadow. It can help you notice your body. It can also help other people price your body. The difference is not the sensor. The difference is who gets the signal after it leaves your wrist. If this was useful, like and subscribe for more oddly useful videos.